Khemani, and let's say hello to him. Vikas, good morning. Thank you for joining us. For a market
Morning.
which was looking almost impossible to, it was looking that it was running on steroids. A lot of concerns have surfaced up. China, FI selling, crude, tensions in Middle East. Do you think we've topped out for the year? Do you think now we should brace ourselves for volatility, downside?
We have had a great run, since in this whole year, and so it's quite natural that it consolidates. It's good that it consolidates. I think mood of the market has kind of switched from sort of one-way bull run to kind of bit consolidation sideways, and I think probably we will see similar kind of mood or sentiment, in next couple of months. Market may or may not correct much, but at least it looks like that it will be more sideways to, time correction is quite possible. And wherever there is a lot of fraud, excessive, sort of valuations are there, you might see a bit of a correction. Already we have seen a lot of correction in the stock specific names. Many stocks have corrected 30-40%. So I think all those things are, quite possible. It's happening. And I think that's good and healthy for the market from a long-term perspective.
Best way to look at this barrage of FI selling which has come. I mean, it's against the general consensus, which was that Fed will cut rates, money will move to emerging markets, and India would gain. The reverse has worked.
See, we saw good flows once the Fed rate, has started sort of coming down. See, emerging markets receive a lot of flow when the Fed sort of starts cutting down the rates, and emerging markets sees outflow when Fed raises the rates, and which is what we saw over last 2-3 years. Almost $40 billion went out, and we've just begun to see come. And in that also, when emerging market flows were going, India was becoming overweight because other markets were not as promising as India. So India was significant overweight. And China was underweight. As China has bottomed out and seen some sort of spike, it is natural that some sort of reallocation would happen towards the country. There is a good monetary policy, there's a good fiscal policy. So there are sort of some sort of signs of China at least bouncing back. I'm not a China expert, but looks like that China is stabilizing and doing well. So some amount of reallocation is bound, but this does not take away the fact that overall emerging markets money flow will continue to remain strong. India's weight in that flow has gone up. So I don't get too much worried about this 1 or 2 weeks of outflows, which is just a rebalancing of the weights. I have a full conviction that as Fed rates keeps on coming down, India and emerging markets will receive a lot of flows. These kind of short-term corrections are very good and healthy for the market, but directionally speaking, I see FI flow remain very, very robust.
If you like this video, then like, share and subscribe to ET Now.